Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Valentine's Day. Happy Valentine's Day, February 14th, 2024. Now, today figured in very much in the way that I was hoping it would and what I wrote in last night's report for my subscribers. Obviously, you're not a subscriber. You're watching me on YouTube here, free probably, or something like that. But my paid subscribers, the ones that get my full research, they understood. I went into depth over the past 48 hours explaining that I thought this could just be a normal correction, 3 to 5% in some of the indices intraday, and you were getting very close to that. We're not through, though. I don't think we're out of the woods. In other words, this bounce just fits in like you fell hard, you came back and you bounced. It's like the next shoe is going to drop. What is that shoe? We have a lot of data coming, so let's look at that, and then I'll give you what I'm saying. You have the jobless claims at 7:30, the Philly Fed regional business activity at 7:30, the New York Empire State Manufacturing Survey at 7:30, advanced retail sales for January at 7:30, January import-export prices at 7:30. Wow. Then you get the Federal Reserve with their monthly industrial production and capacity utilization. A lot of the Fed members are talking about this report, and they're trying to explain away how the market's staying so strong, what's going on in labor. I'm going to come to that in a minute. And then last at 9 in the morning, we're going to get the National Association of Home Builders, and they'll come out with their housing index at 9 o'clock. Again today, one of the features that I'm looking at is the amount of announcements coming out of laying off people. Cisco, 4,000 people, Morgan Stanley, 300 to 400 people in their wealth unit. But this is on top of what's been going on. Now, the amounts of the people aren't staggering. However, there's a change. Suddenly, all these corporations that were so fearful of letting anybody go are letting people go. And don't get me wrong, at the same time, many of them are doing stock buybacks, they're boosting dividends. A lot of these companies have done very well. Not every company is doing well in this cloud computing, just so you know. Today, I won't go into the name here, but one of the companies came out and they didn't hit their number. They were down 20%, like boom. Be careful with that, all right? Very wild. But I see a change, and it's time that you pay attention to that. That change is that employers, especially the big companies, don't seem to be too scared about letting you or somebody like you go. And they feel that if they have to get you back or somebody like you back, they can. That's a whole different game change from what we had going in and through 2023. We've started off the beginning of this year with those statements. That is different. Pay attention to that. That will show up later. Could be in jobless claims, could be one of the first things, but it'll show up in one of these jobs reports very soon. And when that shows up, the market's going to take notice. You be ahead of that. As for the dollar, I told you, and I'm going to state it again, as long as the general economy stays this strong, it's very hard for the Fed to do anything in breaking rates. I was watching today so many of the different ex-Fed members be interviewed on TV as to what did they think of the CPI. The first thing they were right on, does it matter that it went up 1/10? In the scheme of things, not at all. So you got a small bump in the road, okay? And if you've got to use 3-month averages, we've all talked about that in the market. When you smooth it out, doesn't mean very much in any manner. But there's something still strong here. And as long as you're strong, how does the Fed get ahead of the game? They don't get ahead of the game by cutting early. Unfortunately, as I said last night, they'll have a tendency, if they stay too data dependent, to be behind the 8 ball. I loved hearing what Goolsbee said. I want to hear more of the Fed members say we have to have vision. We got to look ahead of the market and understand what they're seeing. I'm sure they're seeing what I am with these corporate announcements of these layoffs, and they're starting to say to themselves, maybe this is where we start looking real hard at those cuts for June or May if they want to stay ahead and not let the labor market really collapse in on themselves. Now, I use that word collapse. Hasn't turned into that we've seen yet, but we have to watch jobless claims and the jobs report. Be careful with that. Some type of warning came out on the energy markets during the day. I don't know if you watched how hard they dropped. We had a very bearish, at least I thought it was, EIA storage report. We put in 12 million barrels into storage of oil. But then something else happened where there was a fear out of the Mideast. Now, I don't know what that fear is. Right now, Israel is not at the table that I'm aware of. They called their people back. They're not going to give in to Hamas's demands. The demands that Hamas is making, and please everybody understand, are insanity. Israel should pull out. They should release everybody out of Israeli prisons for any charge that they've got. They should be released, murderers, whatever. It doesn't matter. You release all those people. It goes on and on into this craziness, and then they'll release whatever hostages are still alive. Do you honestly think Israel's going to do that? The problem is another front's opening, and Lebanon, Hezbollah is firing a lot more missiles, a lot deeper into Israel. Do they keep it contained? And just a warning, let's not let this get out of control because Israel is striking them back. Or does this thing pick up and we get a whole nother fight? The last thing you have to be careful of is, does Israel go in and in Rafah, do we wake up one morning, there's 500 people dead or whatever the heck is, and the world condemnation, all right? Hamas is not going to get what they want at this. I don't like how the press is playing this. At the end of the day, they're a terrorist organization. None of us should forget that. At one point, it is about Gaza being a state, but there's also a terrorist organization at work here, and the demands are completely crazy. All right, so as we take a look here at the E-mini, the weekly here, you can see you're down about 0.5% at this point. You're down here 0.3 when you look at the daily chart, but I'm wondering, is this the beginning of a distribution pattern? What we're so used to is we get these breaks like this, and we go up and we make new highs. If suddenly one of these breaks doesn't do that and we start making lower lows, look for that pattern to be the difference. And that tells you you've got something else brewing. So I'm going to stick my neck out. I always do anyways. And, you know, I'm the Swiss cheese guy. I'm not always right. In fact, I'm wrong a lot. If you take out 2 days ago that break low, I think it's a big bad sign as a chartist. You'd have to go right back through that high to scare me out of thinking that a bigger break is happening in the market. Where might that carry? Well, right now you don't have a trend. You got a higher high, lower low. So the first support has clearly been the 18-day average, and so often you'll hear me say here, that is the line in the sand. That's where markets like to go to figure out what next. But if you start taking out that low, this is very far away, so I think that could be too far away to get to. Therefore, the Bollinger Band's the likely number, and that could be the 4860 area. So I have a game plan. I can see what I'm thinking about there, and it fits in with that I've lost the upside momentum with the stochastics. It's not much different in the NASDAQ. You can see the pattern that's going here. You've lost the momentum. Take that out. The 17,313 area becomes an area of interest. The battleground in the Dow. You don't think you're fighting at the 18-day average? Is exactly the number. So all of them, if they break, the first major supports aren't that far away, but it'll scare the heck out of people in the short term. Then we have to see, does it turn into something else off the PCE at the end of the month? Now, don't think that I'm assuming that the PPI will be bullish or bearish. I'm just showing you what the chart action is. I don't have any idea what that'll do. In the meantime, you're still fighting the battle in the Russell at the 18-day average. All the stock indices are doing the same. The difference here is this is in an uptrend. It has a higher low, higher high. So for the moment, it's the only one of the indices that's in an uptrend. I'm laughing at it. In the 10-year note, first challenge of the combination of the 100-day average along with the lower Bollinger Band has acted as the support mechanism to stall the market. This embedded reading tells me there could be more on the downside. I'd be very careful. Yes, this is where I think the pros covered shorts. Now the question is, does this drag the market back in? Obviously, it's waiting on a bunch of these reports that are coming out. Same in the 5-year note. You're not even getting a big bounce out of this. So that's your battleground. It's pretty evident, at least I think it is. And you can see that you got the bearish embedded reading. Yes, I think there's some short covering, but you haven't left the downtrend in the market. As for the dollar index, the combination now is coming together of support at the 18-day average. I think it's going to crisscross over the 100. And I think this market, if it gets any of these reports that show the economy's super strong here or very strong here, either word works for me, you could be headed up here. That wouldn't be a surprise. So I want to see what goes on, but I think we're at a key time in the dollar. In the euro, obviously, if I'm friendly that, I'm bearish in the euro. Notice how you just had a bearish crossover. The 18-day average just got underneath the 100. Do you see that? So I wouldn't be surprised if we go for these lows again. So I think the bears are going to come out there. In the British pound, they're trying to figure out if they can cut interest rates. They're trying to figure a way around it. Right now, the economy that cuts the rates first isn't going to get the bullish scenario. The dollar wins at this point in time. Eventually, the dollar will think it's too strong. It hurts the U.S. economy, and the breaks that they do in other currencies could be bullish. You got to do that flip-flop. You're not quite there yet. In the Bitcoin, buyers are coming out. They love this area here. And you could be going to the $61,000 area again. Yeah, you heard me say that, 61. This market is super strong right now. It's running the Bollinger Band. This is your gorilla glue trade. I haven't mentioned that in a long time, but it's every day hitting the Bollinger Band. You'll get to points where you get a little too many days in a row over, then you'll pull back. But as long as you have this embedded reading and that taking place, it is not a sign of the market overbought. It's a sign of a super strong market at this point. In Brent versus WTI crude, okay. So we've seen that 540 is a high number, but 5.24, 16 cents lower doesn't tell me a story that it's got to come down. The trend has been up. There's support in the market from 80.95 in the Brent to 80.66. You have a market that acts to me like it's correcting an overbought condition, but it hasn't lost its uptrend at this point. You can actually say the same of WTI, but I hate when the first challenge of a 100-day average. So often that proves to be a trap in the market. Support in this market is sitting at 75.58. Gasoline, watch out. The market now has lost its upside momentum, and that all happened again against Bollinger Bands. You've got to learn how to work with Bollinger Bands. They tell you stories. They tell you how strong the market is. Is it weakening? What's it about to do? Is it right all the time? No, your interpretation of it is the key, and I teach you how to interpret it, and I drill it in every morning in my morning subscriber videos. And those are where I'm getting up 5 in the morning, doing these things bright and early. I haven't been to bed, by the way, in now 36 hours. So I didn't sleep last night. I don't know why. Lower low, higher high, okay? And in that gas, again, now you're starting that gorilla glue trade. So I realized there's so many people that are dying to pick a bottom in this market. You know, even a broken clock is right twice a day. You do know that. But no, you'll not get me doing that. I'll keep you on the true and blue. I'm not interested in the bottom. The first hard rally in this market is going to be probably a short sale. All it keeps doing is breaking under the previous day's low every day. Pretty bearish condition. So as I said, you got to learn how to read these, how to work with them. Do they mean there's more strength or weakness? If you go to our website, iraepstein.com, under education, that's your enhanced Bollinger Band course. You can also click up here. It'll take you there. And if you watch this ad, it explains how this all works, what you get with it. Take a look at it. Train yourself. I'm Ira Epstein. You have a great evening. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.